Hello everyone, welcome back to my channel. I hope you guys are having an amazing week. Today we're going to be talking about the 3 top biggest mistakes when it comes down to investing in the market, and you want to avoid these at all costs. Okay, and if you avoid these 3 mistakes and you learn from it, you will make tons and tons of money in the market. Okay, before we get started and I give you those 3 pointers, make sure that you guys hit the like and subscribe button, especially if you guys want to know some of those hot stocks that everyone is talking about. You guys want to know what's going on in the market, or you want to know in particular of a company that we're going to be talking about in the upcoming videos. Hit the like and subscribe button. It would really help out the channel, and I appreciate everyone that is watching this video. Let's talk about the 3 biggest mistakes you want to avoid at all costs when it comes down to investing in the market. Because at the end of the day, guys, we're here to make money in the market, not to lose it. Okay? And you want to avoid this. Number 1, when it comes down to investing in a company, let's just say easy numbers, $1,000, and we're going to use FRX as the company that we're investing in. And reason why is because I truly believe in the company. I believe in the investors that are behind this company, and I think they're going to do really good things. So if you have $1,000, you do not want to put it all in FRX all at once. That's number 1. Because if you put in $1,000 in the front end and the stock drops, you won't have enough money to buy the dip. Okay? 2 days ago, FRX was at $13. Today it's at $11. So that's the reason why you don't want to put $1,000 all up in the front end. Okay? So my suggestion is you put $300 up front. You see where it goes from there. It can either go up or go down like it did. Okay? But let's just say it goes up. Everything that goes up comes right back down. Okay, just give it time. Now, it dropped, so guess what we're doing? We're putting in another $300 so that we dollar cost average down in that specific stock. Okay, now, if it keeps dropping, guess what we're doing? We're not waiting until it goes up. We're adding more money because we want a dollar cost average. Okay, that's extremely important. You do not want to just sit there and watch it drop. No, you want to start buying into the company. And remember, you're buying into the company because you truly believe in it. If you don't believe in the company, you're not going to buy the dip. Okay? So now, it already dropped. You're already $900 into the company. You already put those $900 in. And let's just say it drops again even more to $10. So you're putting your last $100 on that. Okay, and then you just sit and wait because you only got $1,000. So you sit and wait until it actually goes back up, because it's gonna go back up. Okay, 100%, it's gonna go back up. The second biggest mistake is spreading yourself too thin across the whole market. Let's say, for example, you're on YouTube, you're looking at some channels, and 8 different people recommend 8 different stocks. So you go out there with your $1,000 and you buy 8 different stocks. Now you're only able to buy about 10 shares per stock, right? Now you're spreading yourself too thin because the amount of money that you're going to make is very little. You're going to make a couple dollars. And remember, we're not in the market to just make a couple dollars. We're in the market to make our money grow. So what you want to do is you pick 1 or 2 different stocks with your $1,000. You go and split $500 and $500 each, and you invest in them. Again, that takes us to step number 1. You buy into fractions into a stock. Okay, and when it goes down, you buy the dip. But now this is the key. Instead of you buying 10 shares, you're actually now buying 40, 50 shares with $500, and then the next company or the next stock, you're buying another 50 shares, and you're buying a bulk. Okay, so that means that you're going to make your money grow a lot faster. The last biggest mistake that you want to avoid at all costs, if those other 2 that I mentioned, you already got them down, you already knew about those, make sure that you are tuning in for this last big mistake, guys, that you guys want to avoid, especially on these days that we're on right now where there's a lot of blood in the water. Okay. The last one is do not let your emotions get in the way when investing. Okay. Let's say that you're a brand new investor, you're brand new into the market, and let's say you buy a few shares just to test out the waters, and all of a sudden something like these past couple of weeks happen where the market is having a correction and your portfolio turns red, right? If you're not prepared mentally, you're going to let emotions take over and you're going to say, you know what? This is not for me. I'm not about to lose my money, right? And you're going to sell it at a loss and you might never invest in the market again. You're letting emotions take over. And we need to control those emotions when it comes down to the market and when red days like the ones we're on is happening. Okay, and this can happen to anyone in the market, especially if you're losing $5, $10, $20, $40,000. Okay, and remember, it's not because the market or a specific company is bad. It's just the whole market is having a correction, and it's a healthy one, so that more investors can get in, more people can buy the dip. It gives us the opportunity for everyone to buy more shares at a lower cost. Okay, so do not let your emotions take over. So what can you do so that emotions don't get in the way? First, you need to remember that if you're negative or you're down, it's just what's called paper loss. So you really haven't lost any money unless you actually press the sell button on your screen. Okay, unless you sell out on the shares that you owned. Okay, that's when you actually lost. So don't feel bad. Yes, I get it. I'm telling you guys, maybe you guys are like, dude, this guy is crazy because I'm losing money in the market. Okay, and you're probably getting ready to hit the sell button. But remember, do not press the sell button. What we need to be doing is buying more of those shares. Okay, and you're investing in the company because you believe in it. So buy more shares. And remember, it's time to go shopping. Right now is the time. I really hope that everyone is buying shares because there's a lot of blood in the water. A lot of people that panic sell, they're out of the market already. Okay? You do not want to be one of those. You want to go through the waves, guys. The market is like a roller coaster, right? It went up, a couple months, up. All of a sudden, boom, big drop. Okay? And that's where we're at right now. And then a couple days ago, it went up a little and then it went swing right back down. Okay? But that allows us to buy the dip. So make sure that you are buying more and more shares. Even if it doesn't feel right, I know, guys, it might not feel right because you're literally, let's just say you're literally throwing money into a fire and it's just burning right back down because it keeps dropping. Right? And even if it doesn't feel right, just make sure that you guys are buying more shares. Okay? Because what that means is you're going to be dollar cost averaging down. And when it starts to get momentum, you're going to feel very, very good about you buying the dip. And you're going to make lots of money on the way up. There you have it. Those are the top 3 big mistakes that you want to avoid when it comes down to investing in the market. Quick recap. Number 1, make sure that you guys are not putting all your money all in at once. You guys are splitting up or putting fractions of your money so that you guys can allow yourself to buy the dip. Okay. Number 2, do not spread yourself too thin with a lot of different companies. Make sure you guys pick 1, 2, or 3, depending on how much money you have, so that you make or you're profiting a lot more money. And lastly, do not let emotions get in the way. Okay, that one is huge. If you can control your emotions when it comes down to the market, you will buy the dip and you will make lots of money. Okay, I hope you found this helpful. If you can do me a favor, make sure you guys are hitting the like and subscribe button, and I'll see you in the next video.